What up? For those who don't know, this is something that we do over at the Yeet. It's called chart art now, and basically it's just so you remember like those high school teachers you had who were out of touch and like wanted to make things seem like easy and fun. That's like me with this. Price action is easy, guys, and it's fun, and I'm going to show you how. But so what I want to do is take concepts that helped us with big trades during the week and kind of use some abstract concepts to explain them so that you remember them actually. So for this one, we're going to be focusing on gaps in the hourly. It's called magneto because they move like magnets. They're quick, they get there, and that's how we made a lot of our money this week. So the first thing I want you to realize is that gaps on the daily and gaps in the hourly are created entirely differently in the sense of A, nobody pays attention to gaps in the hourly, and B, gaps on the daily have any amount of time to be refilled, right? So if I go to my daily chart on SPY, and this all leads into how we got the 322% play. You'll see. So here, we're at traditional price action gap. Move that out the way. Right, traditional price action gap. Kidney that made into a kidney bean or a Stu CS. Stu CS probably just aged me, but you can see there it has retest yet, hasn't tried to. Gaps on the daily are not beholden to any rules of speed. They just move the way that they move, and eventually they get tested. You don't know if it's going to be the next second. You don't know if it's going to be the next year. You just know at some point it's going to be retested. That's how gaps on the daily work. As compared to gaps on the hourly, which move really freaking fast. So if we go here, I'm just like looking at random places to find one, right? So you can see with these little hourly gaps, it's like grand opening, grand closing, grand opening. You see what I mean? Like it's just open, close, open, close, open, close. So that's the second important part, right? So when I see that happen, you can see it like all along here, right? Like gap up, boom, comes back test. You could also see what they do too, which is why I played a lot for scalps. It really has honestly been probably like 40% of my, 25% of my scalp wins this year have been just on these. What I did the math, we're at 84% win percentage on SPY, by the way, guys. We did it for the year. Crazy. Okay, so see, goes up, boom, comes down. You see that? Touches it and then continues with work. Right? It's like very important to SPY on the hourly to test those gaps quickly. So when they don't get tested quickly, we know it's a big deal. We know it's something we want to look out for because they want to get back there. So that's where the thesis enter for this week called the gap back go, aka the flea flicker, where the other crucial part of this is back test, right? So crucial part number one is understanding the hourly price action gaps. Crucial part number two is understanding the nature of back tests. I'm not going to make this to a whole back test tutorial, but all I will tell you is this. Traditionally, when a stock is moving up or down, it checks its work. That's the easiest way I can describe it, right? It checks its work to validate that it is clear to go to the next level. It's like, handing them the license at a checkpoint. So up, okay, go check. Okay, you're good. Go up. Okay, go check. You're good. Go up, check. Oh, you didn't pass. Oh, you didn't pass. And then they get bounced there, right? And then they go back up for the same process. Check. Nope, didn't pass, right? So that's the movement that you're used to seeing, right? When you see that get skipped, those are the levels you're saying you might hear called retest, you might hear called back test. That means they need to go back and check that work to make sure it's valid, and then they need to check everywhere that would be on the way down, right? So for example, I think we made this thesis on the 12th or so, right? What did we see? We saw SPY go up to 521.5. Oh, one quick note, by the way. So I trade with gap adjusted dividends on I trade with the dividends and investments back adjusted on my chart. So sometimes the numbers that you might have seen in like last week or something were actually different than the ones that we have on Wells this week. That's because I had my back adjust on, and it adjusts it like electronically while you're trading. But so these numbers are the equivalent, guys, of the 516.75 and the other numbers that you heard about last week. So here we see that it goes up, right? It shoots down. And that to me, right, that to me is a gap. The thing with price action is you have to understand you can interpret it. You always get to the same place, but you can interpret it in many different ways. The reason why that's a gap is because it skips levels, right? All a gap is accelerated price action movement or decelerated price action movement in a way that skips the verification of the buy and sell signals for the algos on the way up or down. All this candle has done because of news is skip the normal traditional buy or sell check and balance mechanisms that are put there by the algos so that they know that it's cleared for a level. So that's an hourly gap, if that makes sense. Where the hourly gap begins and ends, we have luckily this little guide right here. It would be the consolidation range nearby. So it would be the first level that was going to be there. So that first level is, we have here 518.3. I'll get to that in a second and why. So that's the most important point, number one in the thesis, right? We have a gap in the price action that has been formed by that huge rejection candle from the Kashkari news on Thursday. That's number one. Deuce is we have the most important level on the chart, right? We always keep the most important level on the chart. There's usually one or two. Here at the highs, we have one because there's not as much price action. But this, to me, this number two, says this is a ride or die level, right? If we break above it and don't retest it, or we retest it and pass, we're continuing up. If we get to it and fail, we're going to stay down. For people who follow the EAT and read the EAT, this was the 516.75 level that I was tweeting and talking about. It's just different what they adjust on. So this level, we see that it has one reversal, two reversal, right? So that makes it a super important level for us to know what's going on with the chart because we also see it was a support there as well. And then we see leading up into the big day here, right? It also acted as support there too. So we know that that's an important level. So we're going to go ahead and keep that in our chart for now, right? The third is I found an hourly price action gap to the downside. Unfortunately, frustratingly, the tail on this one's too long. I originally found it on TradingView. The tail on here is a little bit too long now, but it was roughly 20 cents short. Actually, where this one came to right here, at this 5, it says 5, 10, 13 there, right? Was actually the lowest. So I'm going to circle that just so you guys can see. So this level roughly was actually the lowest that wick went. This wick is kind of wrong up until here, just because sometimes it just loads funny, I guess. So I'm just going to doodle that out. That's such a good whale partner. Yeah, so that was really what it was, right? So, but it was roughly, where it stopped was roughly like 5, 10, 13. But remember, we want where the gap closes, and the gap closed at, if we go down here, it was 5. Oh, it was 5:10:03. It's hard for me to see the caret over there on the right side. It was 5:10:03. So anyway, it was 5:10:03. There was some gap left about 10, 13, right? Which is like 10 cents. I think it might have been like 15 cents. A lot of people will ask me on gas and price action gaps, you can't be serious about caring that much about like if it didn't close 10 cents, right? Like you're crazy. It doesn't matter. And I would tell them to silence themselves and look at the win-loss and then tell me if it's wrong. Yeah, I'm just kidding. I wouldn't say that. I'm a nice guy. B is I would say for them to look at the examples, and I mean like countless examples of it coming like right to where the price action was, check to work on the price action, and then continue. Particularly recently, there's just been so many good examples of it. So you guys are actively watching me search for this, but it's worth noting. It's just damn it, it's worth noting. Here. Right? So here's a gap, for example. This is just one example. But you see it come down, gap's down here, and then where does it go right up to? Right up to the gap closure level, and then comes back down, right? It doesn't come up like 8 cents short and then do it, right? It has to go all the way up and then come back down. Another example here is, right, like you think that here on the 5th, it gaps down. So they have this downward movement, right? But when they come back up, what do? They take it to the level and go right back down again because it has to get retested. So they weren't going to get away with that downside move without retesting it. And look what happens. It doesn't hold and it goes up to the next level. So it really does matter these like 1, 2, 10, 14 cent differences or whatever. So that's part deuce. And then the third part is putting it all together, right? So how do we go from knowing these things to a 322% play? The way that we did that was I waited to see what kind of support we had at our most important line on the chart, right? Whether it was support, whether it was rejection, what was going to happen. And my thinking was that wherever we got that support or rejection would go up to the next level, right? Because that level would determine if it was going to the next, checking its work. But then at next level, they would realize that we were going that. It's weird to think like an algo, I'll admit it, but it's something I do help. So if they're going to the next level, right, which would be determined by the level that we crossed, then that would mean that we were scheduled to go up or we were scheduled to go down. But the problem is we would still have that leftover price action hourly gap, right? So then the programming would have to go back and close that really quick. That speaks to a larger sort of thinking of, how do I put it? Backtests and retests are just annoying work that has to be done, right? They're just algo cleanup homework. They have to happen. The direction that they want to go in is the direction that they want to go in because it's been programmed to do that way by all the money, blah, blah, blah. But they have to go back and clear those like last checks for them to go do that. So my argument is whichever side of that it was on would be the initial side, and then they would have to go back and check their work on the other one. Things got a little bit problematized because SPY went up to 519.3 or something like that. Like it went up to just shy of where I thought the price action candle gap was going to be, but then it did get our immediate drop down. So that is why on putting it all together, that is why on Thursday on Yeet Plus Twitter, I said for us to get into the 515 Ps expiring the next day. That's the one that closed for like 300%. I should have closed it for like 600, but I was greedy. Or like, I think it was like 500, something like that. But anyway, once I saw that rejection candle, right, in the overnight session, I pretty much knew that our thesis was going to be on point because the only reason why they would come up that hard and that fast and then fail the level with that much force would be to go back and close that gap. And so you can see it went just beneath it a little bit, wicked up, and then came back into play. And now we can see where it rests at the end of the day on Friday. Exactly on the gap line. But there is a problematizing issue, which is that I'm going to alter the chart slightly because I made a discovery. And that will be in tonight's Yeet for Yeet Plus, where we do our week's plan. I'm going to tell you what the updated plan is for the Gap Back Go. So anyway, summing it all up, look for your hourly price action gaps. Look for your candle price action gaps. Find the most important level on the chart and wait for confirmation or loss of that level to let you know which gap you're going to go for and play it for easy money. All right, later.